All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great day. And, we're seeing a bounce in risk, like I mentioned on the FACE webinar. This is expected on a Monday. The question is, how far are we going to go? And that's what I'm thinking right now. Hold on one second. I'm sorry. 1 second, guys. Okay. My question is, like I said, how far is this bounce gonna extend? I'm really hoping, as I mentioned to you guys on the FACE webinar, I'm really hoping we can bounce back to 4,200. Because if we can bounce back to 4,200, that's where I'm looking to sell risk in general. Let's see here. Uh, 42, and I'm gonna write this down. 42. I guess. Well, the 50% retracement, because the 50% retracement would be right here at 4203. So if we can get just an extension up to there, that's and this would, again, this would be the underside of this trend line. We could even go a little further than that, but I'm going to write down today, if we see 4,200, I have to sell risk up there. I might sell the S&P. I might do other things. When I say other things, and by the way, this is bearish now. And I know you might go, well, Blake, how are we bearish? It's like 4,200. We've been at 4,200, stuck here at 4,200 for weeks. It's not that it's bearish right at this moment. I think it's a bearish structure that we came out of this ascending wedge. So I am now completely focused on shorting risk. So like I said, what I'm hoping happens here is we get a bounce from, maybe another 15, 20 S&P points. And once we reach about 4,200, like I said, I may not short the S&P just straight away. I might actually just start selling like Aussie dollars. If you're not in the chat room, I just want to let you guys know, I also added to my Euro New Zealand exposure overnight. I bought some more Euro New Zealand at, let me tell you where. 170.40. So I picked it up at 170.40. I think that this is a breakout that's actually, going towards the channel resistance, which will be up here around 173. So I want to play it on the long side here, obviously. So I'm bullish, and I'm really bullish on a move above 71.50, because then that, it's obviously that gives us another 100 some odd pips higher. So sorry for the yawning. It's Monday morning after Father's Day. My wife and her friends celebrate Father's Day way more aggressive than the fathers do. I just put it that way. Yeah. Anyway, I still got a lot of cleaning up to do around my house. As a result, sorry, got to go back. Let's go back to the chart. So 4,200 is resistance. Where's the S&P support? Well, okay. So this low to high, the 618 retracement is down here, but the 50% is holding. So that's also horizontal support. So I'm going to say I need dip down. We're almost there. Hold on. I'll come back to that. So any dip down to 4150 should be well supported. That's a 50% retracement. So let's just go ahead and write that down. 4150. 4150 is support. Not even great support. It's just the 50% retracement. All right, let's go back to the sterling really quick. So the cable is up about 100 pips. We're at previous support acting as current resistance. Now I want to do something really fast. This actually is probably not a bad short here. The only problem that I have with the sterling is if we do some risk off, I'd rather, you know, I'd rather let it, I'd rather not short it. I think playing this long on some crosses would be better. But let's let it bounce back to 140. Because if we can squeeze past here, we should be able to make it back to 140. So let's do this. Okay. We're not going to reach for 140. We're going to remove that. We're going to reach for 139.60, which is the 38% retracement. 139.60. I'm going to keep this in range for now. Okay. Support should be, any dip back down here should be well supported. Any dip back down to here should be supported. So 138, let's call it 138.35. Okay. So the Aussie, Euro. So we were bearish on Thursday, Friday. Today, I'm going to put it in range. Okay. The 78% retracement, big support down here. Big support down here at 118.20. So, yeah, I mean, obviously we'd be really lucky if we reached for 118.50 today, but resistance for the euro has to be there. 119.80. $118.50. Okay. Now I'm going to leave that in range because, you know, yeah, we were bearish for the last couple of days, but we're really more range bound. The Aussie, though, this is bearish. And I know we're getting a little bit of a lift right now, and that's fine. I want to stay bearish the Aussie. So if you missed it in the chat room, I told everybody that I think we're reaching for like this, you know, 75.50 level. I've got an order actually to sell a little bit of Aussies up there. So this previous support right here at 75, that's actually 75.60. Let's write that down. No, we're bearish because we came out of a big triangle and there's more downside here. So support today is 74.75. Okay, so I'm looking to sell any bounce today. Let's go over to the Kiwi. Similar situation with the Kiwi. That was such an aggressive move, and you can see we actually the obviously the little bit of a risk with the Kiwi right now is this is a false breakdown. You know, here, let's get rid of this. So I'm going to actually write down support down over here at 69.40. Oops. In my opinion, this is happening. Oh, shoot. Did I just really do that? I did. I didn't mean to do that. Okay. I think this is happening. So we're eventually going to make our way back down to 68 cents. Obviously not in one day. I'm just saying that is, I think, is happening. It's just a simple AB equals CD, lower highs, lower lows type of thing. The question is, how far did we bounce? In my opinion, how far did we bounce before we roll back over again? So what I'm going to do is I'm going to take this last leg lower right here. So we're at a 24% retracement. There's a lot of resistance up here at this 38% retracement. So that's 71.13. So I'm going to, or 70.13. I'm going to write down 70.15 is resistance. Okay. All righty. Dollar Canadian. So this dollar Canadian's had a hell of a run. I'm looking for a move back down to 123.50 to be a buyer. So if you look at this spike low here, you see it right there. See that spike high right there? That means this is support. And you can see the nice consolidation there. So I'm assuming that we will see 123.50 again. And this is where I want to be a buyer, 123.50. Okay. Obviously, resistance is going to be, you know, any move up to 125. But you have to imagine this is literally a 500 pip move in just a couple of days. That's a big move, guys. Obviously, it's not a move you want to stand in front of. I'm just saying that that's such a big move that we have to expect a little bit of a pullback. So move back to 123.50 is just not out of the realm of possibilities. Now, at this stage, we get a bounce back to this support over here at 124.20. I think people are going to be happy to sell up there. So I'm going to write down 124, 20. 120, 120, shoot, 1.25. Okay. I do think we're bullish. I'm just looking to buy dips. I have an order to buy the US dollar Canadian at I'm starting a position at 123.82 here. Okay. So I'm going to try to get a little bit here, and then I'm going to add it, 123.50 if we can make it down there. The problem is we're like we've pushed below 124, and it looks like we're trying to hold here. So I think that we could see a little bit further downside, especially right at the open if equities spike higher. Mutual Fund Monday, why not? Swissy, hell of a move in the Swissy. So let's see if we can get a move back down here. This previous breakout point, hourly support over here. That's going to come back down at 91.60. Resistance. I mean, we have to write this down, 92.40. The 618 comes in at 92.67. So I'll write that down. All right. US dollar, Norwegian krona. This has been a hell of a squeeze. So any dip back in the US dollar, Norwegian krona, probably right here. Get rid of this. I'm going to say these spikes right here are going to offer a lot of support right here. Okay.
Webinar y escuelas más.
Hey, Steve, you're not muted.
Hey, sorry, mate. Sorry.
No problem. No problem.
My mistake.
No problem at all. Let me get rid of this. I can leave that. So it's interesting. This spike higher here to previous support. Oops. Right here. I mean, it held in essence, but it's really a lot of these highs right here. So I think it's possible that we head back down towards 855. So this is where, wait, hold on, let me put in my name just so I can, when I read it, I'm like, oh, I physically put that in there. So 855. Now remember, we came out of a wedge, so this is bullish. Resistance right now is 870, 872. That's the overnight high. I think that's going to be significant. Dollar MEX. Dollar MEX isn't acting as well. But this support zone, I think, is going to hold us for on dips. So that comes down to 2032. And remember, that was resistance on the way up. That's going to be support on the way back down. So I think that's going to be fairly important. I think one of the things about the dollar Mexican peso that is one of the things that's, you know, not allowing it to bounce too aggressively is stocks are really still holding up, right? So resistance right now is 2072 roughly. I'm going to leave this one in range. It just hasn't acted as well as the others. I still would rather play this on the long side though, just so you guys know. Okay. Dollar yen. This trend line support comes in at now 109.60. Resistance will be, I mean, that we went as high as 110.80, but I think now we might find resistance ahead of that. So I'm going to write down resistance of 110.40, then 110.80. So let's write that down. 110.40, 80. Oops. Okay. Dollar index. So obviously big resistance is right here at 92.65. We should probably look at any dip back down to 91.40 as being very well supported. That comes in 91.40. I'm going to put this in range because, you know, I do think we are in this wedge. So any move back up towards 92.65 should be pretty significant. Okay. Let me do gold, silver, and Bitcoin, and then I'll let Steve take over. So Bitcoin, like I said earlier, guys, if you really want to buy Bitcoin, this is the place to do it. It is. I don't necessarily agree that it's, you know, going to bounce here. I'm just saying from a risk reward perspective. So support right now, let's just call it 31, that's the low, is 31,700. So I'm going to do 30K, obviously is important. And then 31,700. Let me put not a comma there. Slash. Okay. Resistance intraday, 36,000, then 36K, then 42,500. It's bearish. Gold and silver, both respecting the 618. So 25.60, 25.65 for silver. Resistance right now is going to be 26.50. I'm going to keep silver in range. Gold, on the other hand, I think acts like crap. So gold, obviously, if we break through this here, let me grab this here. So obviously, if we break below 1760, it is going to get ugly. But I think any rally back to 1800 is going to find sellers now. So any move back to this level right here, okay, which currently is 1805. All right, your bias chart is finished. Oh my God, NASDAQ's imploding. Hey, Steve.
Hey, mate.
How's it going?
Good. All good to go.
Oh, good. Good.
I'm not at my place, but
what's that?
I'm not at my place.
You're
It's a holiday today, so we were out at friends,
Oh,
having a swim at their swimming pool. I'm now at their house. I have a good Wi-Fi. I have my new laptop, so I'm good to go.
oh, okay. Oh, good. Well, that's good. I didn't know today's a holiday.
Yeah, it's one of those religious holidays, like Holy Spirit, something like that, I think.
Got it. Got it. Well, well, enjoy the holiday. Enjoy swimming.
I already did that.
All right. Well, cool. We swam in our pool yesterday. It was 95 degrees in our pool. So let me just put that in perspective. Degrees to Celsius.
Your pool had a fever, more or less.
So yeah, it was our water was 35 degrees Celsius. Yeah. It was it's like bath. It's like taking a bath. Anyway, but it was cooler than 115. So let's just put it that way. All right, I'm gonna leave it to you, Steve. You guys have a great one, and we'll catch you all. I'll catch you guys all in the daily roundup or in the chat rooms.
Thank you, mate.
Thanks,
great.
Guys.
Bye, mate. Okay, so now be a little bit patient with me. Kind of new computer. Haven't. Give me a second. Okay, let's put this there. Okay, some confirmation. Can you all see my screen?
Yes.
Okay, good, perfect. So, unfortunately, Blake, I am not sure, what exactly you covered outside.
The majors. I just covered the majors. That's it.
Oh, okay, good. Outside, I meant, outside the bias chart, obviously.
Yeah.
Okay, so I doubted that I see things differently than you do, having to do with the majors. So what I wrote in the weekend analysis is that it's exactly what we were talking about last week, meaning I do think that this move that we're seeing unfolding is corrective, but I also think that this is a corrective move that's not of those that last like, 1, 2, 3 days and they're over. So bottom line, I think that in the short to medium term, there can be money made being in the long side of the dollar, perhaps even in the short side of stocks. I wouldn't be surprised though if we need to see a little bit of a a pullback in the dollar before we see a continuation higher, which is going to produce buying opportunities for the dollar or selling opportunities for the other currency pairs against the dollar. I'm assuming more or less that we would be looking towards the same levels with Blake. So I'm going to bypass the majors, the Aussies, the Kiwis, the euro, the pound, so on and so forth. And we can straight ahead go and speak about equities and then some of the other assets and some of the cross rates in FX. Now, I know there are different ways to draw, this trend line support in the case of the S&P. This is how I had drawn it a long time ago, using that low over there, that spike low over there, that spike low over there, which coincidentally or not, signaled so far on Friday and today the low. I'm saying so far because, as I said, if we're assuming that dollar strength is going to resume, more clearly than not, we should see continuation lower in stocks, which means that there is a very, very good chance that any little rebound here in stocks should find sellers for at least one more leg lower. That would also bode very well. If you remember, both myself separately and then with Grega, we analyzed the possibility. That was actually Grega's second count, but for some reason it looked to me like a very good scenario that this might be an expanded flat, which in simple words means that perhaps this little move lower that we had over there was just one leg of a bigger correction. This new high was the second leg, and perhaps we need a lower low to complete this corrective move. That would imply a move towards 4,000, even a little bit lower, like 3980, would be a good area for several reasons. First of all, we're going to see a lower low, and that's probably where a lot of people that are inherently bearish will go all in to the short trade, and that's not going to prove, a wise move to do. On the other hand, it's it's a move that completes the specific formation I was talking about. So 3980, 4,000, I think it's a good area to look for. But the asterisk is, I reiterate, once and if we do break below this ascending trend line support, right? Because typically speaking, as long as we trade above this trend line support, there's no bearish event to talk about. Yes, we have broken down through this blue ascending wedge, but we still have a sequence of higher lows, which is the basic definition of an uptrend. And the only really bearish signal we've had so far is this RSI divergence that we're seeing here, right? On its own, not a good timing signal, right? So keep that in mind. In any case, as I said before, since I do believe that this dollar rebound probably has more to run, mostly due to positioning and sentiment reasons and not due to reality. I'm not going to spend time analyzing once again why I do believe that, irrespective of what the vast majority of market participants believe, both the FOMC statement and the press conference that followed were extremely dovish. Fundamentally speaking, I don't find any reason why that would have been the catalyst. But I do know that many times when the market is one-sided, it's just looking for some kind of a trigger to move the other way. So since I do believe this dollar rebound might extend, I also do believe that there's a very good chance that we're going to finally break through this longer term formation, and we're going to see somewhat of a deeper pullback in equities. So, if you want, I'll be more than happy to look at other indices separately. Clearly, in this case, as you see, the Nasdaq is acting, somewhat better. Perhaps it's lagging a little bit from the S&P. In the case of the Nasdaq, you would obviously look for this blue ascending channel to be the one that's going to break before we see an extension lower. So, a little bit of a different type of formation, but, the concept is more or less the same, right? Now we can go through a billion indices if you want, but, bottom line, you very well know that the S&P is the benchmark for risk assets, and whatever the S&P is going to do, with some divergences, the rest of the indices are going to do. Some of them are going to be comparatively weaker. Some of them are going to be comparatively stronger, but more or less, the rest of the indices should follow. Now, I know that there is a lot of spotlight on the precious metals for obvious reasons, right? Because they are the ones that have also been reacting very, very strongly to this newfound market belief that perhaps the Fed is willing to act sooner. I've told you before, I believe that people that believe in this are going to be disappointed. And that disappointment, I don't know in exactly what form it's going to come, is going to be actually the catalyst, in my opinion, for the next leg lower in the dollar. But until that happens, you should respect this move lower in gold. You should respect this move lower in silver, which prove that gold and silver remain in some kind of a complex correction since summer of 2020, when we actually found an all-time high in the case of gold, a high but far away from the all-time high in the case of silver. Now, I do believe that in the case of gold, any rebound towards 1805 is the first area. Worst case scenario, 1845 should find sellers for another leg lower. I wouldn't be surprised if not only we ended up testing the previous double bottom at 1,676, I wouldn't even be surprised if we saw a lower low. I don't think, though, silver is going to follow in that. And I'm saying this because silver was in a different type of formation in this symmetrical triangle. And although I do believe that silver is very, very likely to see lower prices, I think it's going to be within the context of this larger triangle. So I do believe that rebounds should find sellers, but I very, very much doubt we're going to see prices below $23. Within the context of this symmetrical triangle, we can and we will probably see lower prices, though, with downside targets being roughly at 24.5 being the next one, and 23.75 being the one after that. Keep in mind that as we speak, we're testing a nice confluence of supports, which in essence held at the end of the big sell-off on Thursday, held on Friday, and is holding so far today. It's the confluence of the 61.8 of this last move higher and the 200 daily moving average, which you can't actually see because it has gone completely horizontal, and it's in essence embedded with this fib line, the 61.8. So both of them are 25.65. That's why I think we've stalled where we've stalled, technically speaking, for the time being. I do think so, though, that if we see any move towards 27, we might not even get there. We should see another leg lower and start gunning for the downside targets I mentioned before. Once again, within the context of this ongoing corrective move, I have zero personal worries about my bias remaining what it is, right? I expected at some point that we're going to have a corrective move. That's normal, that's natural, that's what the markets do. And there is absolutely nothing I've seen so far that changes my bias, which is longer term, much higher precious metals, much higher, more or less anything that has intrinsic value, much higher commodity prices, so on and so forth. Keep in mind, though, as I said, that in this case, we're seeing a correction that's like stronger than the previous ones, which means that there is room to move in that direction, right? So if you want to try to make money going counter trend, I think that in this case, you will have the opportunity to do so, right? Previous times, the market didn't give you such an opportunity. In this case, it does. Now, platinum is finally following suit, meaning breaking through this channel, which proves that the pullback is probably going to be stronger. oversold conditions in the daily RSI also, in essence, confirm that this is a strong move lower. We've now reached this area I talked about a long time ago as a potential downside target, 1040. Now, the way we've moved down to it, and as you see, for the time being, we're stalling. We closed there on Friday. We've stalled there so far today. Having seen the move we've had so far, though, I'm in doubt this is going to prove to be enough. So I would start looking for lower potential targets, with like 950 being the next one, right? So keep that in mind. As I've said many times, it's very, very easy to make some plans in advance about what's going to happen if we do see, for example, a sell-off, like we're seeing here, right? But you also have to reassess once a move starts unfolding based on the price action. So it's nice to have a plan in advance and some targets in mind, but that doesn't mean that, you should just leave it there and hope that the targets you once set are going to be the ones that the market is going to respect like months later, right? You need to keep following the price action and see how it's moving. And for the time being, I doubt we've seen the lows in the rest of the precious metals, which means that I've doubt we've seen the lows in platinum as well, right? So probably in the case of platinum, any rebound towards, I would say roughly 1,100 should find sellers. So for example, we see something like this, let's say, we should see sellers for at least one more leg lower, with 950 being the next downside target, as I mentioned before. Palladium already proved that that's the case when it sliced through this trend line like it wasn't there, which immediately invalidated the possibility that this was a corrective consolidation. This opens the door for more downside targets, which we're definitely going to see. I mean, this type of a move is almost never the end of it, right? Look, though, how this confluence of supports, we have the 61.8 here, we have the 200 daily moving average, we have this horizontal support resistance area. They seem to be holding for time being. So perhaps this area is the one that's going to produce a little bit of a rebound. That is going to give the ability for sellers to step in and push it lower once again. Now, I think this is a little bit of an optimistic scenario, but doable. Going back to 2,700, I mean, I think it's a little bit of an optimistic scenario. We might not see 2,700 again for now. I mean, as long as we are in the move lower, we might not. We might stall lower. We might stall somewhere here. Previous consolidation lows over there, 26.15 or so, right? I mean, there's no real perfection in calling these levels, but this is what I'm looking for. So look lower. Copper, same deal, right? We sliced through this channel, which tells me that any little rebound here, and if we're lucky and retrace back to 436, which we might not even see, that is going to produce another leg lower towards 385. Now, those of you that are almost daily here, I'm hoping that you can learn a little bit of the change in mentality of how I like to see the trend and analyze it, because I think it's very, very important, because it helps you stick with the trend, right? I mean, I kept looking higher and I kept analyzing every pullback as a shallow correction until proven otherwise. And at some point, you know that it's going to prove to be otherwise. But once you plot that and you know exactly where the idea that this is like a shallow corrective move in a strong trend gets invalidated, then you know to look, in the opposite direction. But this gives you the ability to stick with the trend for much, much longer. If every single time we show a little bit of a pullback in all those assets, you would have lost a big portion of the trend, right? In this case, you know that inevitably, if you're trading a market, with this logic, you know that at some point you're going to have to give back to the market, a small part of your profits, but at least you're going to be sure that you've milked the vast majority of the move in the direction it was going, right? And I think this is like the most important basis of trading successfully. And of course, this applies to any time frame you want. Personally, you know that my time frames are daily, and I'll very rarely go below the 4-hour chart. But the markets are fractal in nature. So even if you're a shorter term trader, the same applies if you're looking at shorter term time frames. Now let me see what else. Crude. So it's it's really astonishing how crude is ignoring everything else that's happening in the commodity complex, right? It remains extremely strong. Yes, I do see the potential of a very good risk reward trade here against the highs, with the logic being, if everything else is dropping now against the dollar, and if we assume that equity indices are going to push lower from here, the chances are that sooner or later crude is going to have to follow. And I do realize that. But still, it's very hard to ignore and bypass how amazingly strong crude remains, right? So, relatively speaking, it displays amazing relative strength. Yes, it hasn't produced new highs, but look at how close to the highs we are, right? So, bottom line, in isolation, especially if I have to look this chart in isolation, there's nothing really bearish for the time being. I'm just seeing a little bit of a consolidation near the highs. Now, I do believe, as I was saying until last week, that we're closer to the beginning of some type of a corrective move lower, which we haven't, in essence, seen in a very long time. But we don't have the equivalent trigger we saw in almost everything else yet. Now, natural gas is a different story, because natural gas is breaking back within this symmetrical triangle, and this is not a good sign, right? Because we had a little bit of a false breakout here, right? And then back within the triangle. Let's see how we close the day, of course, but back within the triangle now, this is a little bit of a worrisome sign. So, keep that in mind. But in the case of crude, we're not seeing, anything equivalent to that. I'm not going to go over cryptocurrencies once again, because I said what I had to say before. I think this is probably a flag in Bitcoin. In Ethereum, this was some type of a triangle. I think Ethereum has already broken down. I do think there is more pain to come in cryptocurrencies, as simple as that. Downside targets, in my opinion, are 1,300. In the case of Ethereum, I think we're going to retest this low most likely than not. And in the case of Bitcoin, I've already said my downside targets are 24,000, and after that 20,000. And I think both targets, where we currently are and with the way we're currently moving, I think that both targets are easily achievable, easily doable. Okay, keep that in mind. Hi, Steve, we love your thoughts on copper. Okay, we did cover this at this level, please. And if you have time on USD ruble, absolutely. Let's have a look at USD ruble. There it is. I have to tell you that I am a little bit perplexed with USD ruble, because I'm not sure what kind of formation we've been working on since that high and that low. We seem to be in some type of a larger consolidation. I was then monitoring this perhaps as an expanding formation, but nothing really rhymes, if you know what I mean. I mean, nothing really plots nicely. So, technically speaking, I'm not sure what we have here. I'm sure that longer term, this is some type, it might even be a triangle, right? So, I mean, the easiest thing I can say, looking at this chart at the moment, is the easiest prediction is that, oh, perhaps we're in some kind of a triangle. There is one, right? This one, for example. But I'm not sure. I'm not sure. Looking at the longer term formation, I've said it before, I know that many people see here a cup and handle formation. I have to tell you that I'm extremely skeptical about it. The Russian economy has a lot of upside potential. I'm extremely bearish the dollar. So although I never dismiss a technical formation, I'm going to find it very hard to swallow the pill that, this might be a cup and handle formation that's going to be leading, because this has a potential target of like 110, right? Unless we see a break above the neckline, right, at 80 to 70, let's say 83, I'm going to be very hard to be persuaded that this is what we're seeing. So, I'm seeing some type of a consolidation unfolding here, but I don't know. If I focus on the shorter term and this move lower, I would have to say that you'll probably need to find levels to sell into, right? With 73.50, 75.30 being upside levels of resistance. But really, I wish I had more clarity in this pair. And one of the things I learned a long time ago to do, both with women and with the markets, and it's not a chauvinist comment. It's just because I'm a man. If I was a woman, I would say the opposite with men. Is not to force things. You know what I mean? Not to force things. I mean, I don't want to force myself into persuading me that, I do see something clearly here and I need to follow it. So when I look at a chart and it doesn't jump on me that, okay, this is what I'm looking at, I just let it be. I mean, I am not going to force it until one day I open at the chart and I feel that now I have an understanding of what is unfolding in front of me. You know what I mean? So my suggestion is you do the same. Once you open a market and nothing jumps on you as an obvious trade, don't trade it. Look at something different to trade. You know what I mean? You say personally, I'm thinking much lower prices on this pair from a fundamental perspective, purely from a fundamental perspective, but I never trade only on fundamentals. I think that USD ruble is headed much, much higher than the multi-year lows at 55.30. Sorry, much, much lower. I meant the ruble is going to move much, much higher. USD ruble much, much lower than 55.50. So fundamentally speaking, I totally agree with you. I'm looking for much lower prices, but technically speaking, I still don't see the formation that will make me think that, it's headed lower now, or it's headed lower, imminently. So I should, jump on this trade. I think at the very least we need to see prices below 68 to confirm that after all this choppiness that we've gone through since we found a high over there last March, right? Exactly when everything topped or bottom, actually. 19th of March, if you open almost every chart, you'll see that the vast majority of them have found a lower high at 19th of March, be it equities, be it FX pairs, not all of them, but many, right? So I tend to believe that yes, we're going to head lower eventually, but I don't see why it's going to happen, from here and right now. Do you cover speaks of Bullards and Kaplans? You mean the speeches of Bullard and Kaplan, the Fed governors, right? Gorkim. Yeah, I end up reading, sooner or later, all of them. I have to tell you though that I dismiss all of them as noise, because I've seen this happening repeatedly, and it's annoyed me so extremely much that sometimes I don't even read what they said, because I'll tell you in advance what happens with governor speeches. They say something dovish 99% of the times, especially if they're voting members. The times that you're going to see a statement that's somewhat hawkish, you'll notice that almost always is from non-voting members, right? Because they don't have to prove that they're not hypocrites, because they're not going to be called to vote a few days later in rate path or whatever. So, and even when they do provide some statements that are somewhat hawkish, usually what happens is if the market cares about the person that said it, what's going to happen is that the market is going to react. And what's going to happen when that happens is that they're going to realize that this produced some kind of unwarranted volatility, and they're going to get some other governor coming out and, in essence, invalidating, erasing the previous statement that created some kind of a sell-off or some kind of a knee-jerk reaction from the market, right? Plus, I want to remind you that so far the Fed has gone with many years of unanimous decisions all the way. So whatever they end up saying, what we know they're doing at the end is they unanimously vote for whatever they do, and we know that what they do is extremely dovish. That's why I've stopped paying so much attention to what they say, and I do believe that the market has also stopped paying attention to what most of them say. Yeah, exactly. Yeah, I understand why you're exhausted, and at the end of the day, it doesn't even pay off. Iral Lira USD. Okay, can you give me uh, ca- um, can you give me, mate, the ticker for the Lebanon Lira? I've never covered that. I have to tell you that much. Let me see. Hmm. Okay, this has to be it. US dollar, Lebanese pound. Whoa, this thing is liquid probably. Is it pegged or something? This has to be pegged. Yeah, this is not normal market movement. This thing is probably pegged by the central bank to move in a band or so. So I don't think there is any analysis that can be done in that. If we're talking about this pair, US dollar, Lebanese pound, they've clearly pegged it at 1500, right? So not much we can say about that. Yeah, it's clearly pegged. Clearly, the central bank has pegged it to the dollar. It's more than obvious from the way it's moving. As you see, it always comes back to 1505, right? It's moving in a band between like 1500 and like 1520. I don't see anything in the chart for quite some time below or above this level, so it's clearly pegged. Uber, yeah, let's have a look at it. Uber must be really desperate. I was for the expo in New York. It's now like 1.5 years ago. What is it? I used Uber a couple of times. I still receive twice per week mails from Uber and push notifications from Uber for Uber Eats, so on and so forth. So yeah. So one of these cases that you have a triangle breaking the downside, oppositely in the direction of the trend. I am meant to say in essence in this case, which is not so common, right? Uh, Not an easy chart. Oh yeah, not an easy chart. Let's see. So that was a nice breakout from there, a very nice breakout, very nice technical breakout. I would tend to believe a little bit higher than lower, but we might go just straight lower from here. In any case, I wouldn't be bullish for now for any reason, right? So not bullish. Let's start from that. But I think there are better looking charts at the moment. So basically, to be fair, I just wouldn't trade this. I don't like what I see. It's not so clean. So, I would look for something else to trade. ARC. Yeah. ARC. Okay, last time we checked ARC, we were there. I said lower than higher. Now, yeah, although I could just, claim victory for my prediction, I have to tell you that I don't really like the way it's moving higher. So yeah, so far it has followed what I said, but seeing this move higher unfold for the time being doesn't really inspire me. So it makes me think that we might not be done. That's what I think, that we might not be done. I think we might have more to go here soon. By soon, I mean, we seem to be running out of steam. RSI hasn't even gone to overbought. I think we break through this trend line support, the blue one. We should see a push towards 81.5 next. That's the direction I would be looking for in ArcMate. NDX. Ooh. Yeah. We already covered the Nasdaq. Now, one more thing I can add to the Nasdaq is this. Alternative technical interpretation for the Nasdaq, right? Just putting it on the table. But for the time being, against the highs, especially with what's happening with the dollar, I think it might even be worth a stab to the short side. Look at the RSI as well, diverging since the end of 2020. Keep that in mind. IWO, what's that? It's the Russell. It's an ETF for the Russell. Okay, let's go to the IWM then. They are almost similar. Nothing here, mate. You can see. Still within a consolidation until proven otherwise. This should be treated as a bullish consolidation, right? Until proven otherwise. But within the context of this triangle, we have more to go to the downside. We can easily move down to 213 and still, maintain a bullish. By the way, this head and shoulders formation is dead now. In any case, as I told you, since we drew it, it was never my main case scenario, because whenever you see a consolidation in an uptrend, you should consider that whatever formation points to continuation higher is the most likely interpretation, not whatever predicts a reversal, right? Reversal formations are more rare, right? So IWM for the time being, it looks healthy. In the short term, it has more potential downside, but on the other hand, nothing has invalidated the bullish outlook here for the time being. Nothing. Steve, what do you think of GDX? Yeah, that's a good question. Let's have a look at the GDX. Okay, last time we talked about it, I said lower. I said don't try to fade it here, and we might find ourselves back to 3150. Haven't changed my mind. I think it looks very, very heavy. So in the short term, we should see lower levels. I think 3150 is a magnificent level. Anywhere between 31 to 3150, I think is a great level to find a bottom. Now, as I've said before, and I like to keep repeating myself because these things are very, very important. The fact that I love this support area between 31 and 3150 doesn't mean that I would be willing to buy it, irrespective of how we find ourselves there, right? What I'm trying to say is that if within the next 2 days we've just gone non-stop to 31, 31.50 without even a little attempt of a rebound, I'm going to immediately tell you that this pullback has more to run. So I'm going to be looking for lower prices. But if we start slowing down and we find ourselves stabilizing at the area of 31, 31.50, then I would be very much interested to be on the long side from these levels, right? So keep that in mind. So it's not about having some levels in mind. It's also about how price reacts when we get there. Now, we do break through 31 because let's say this pullback is very aggressive in nature. Then the next obvious downside target would be the 61.8% fib from this move higher that you see here, right? The March low to the August high, which comes at 27.5. Also previous high over there, right? But in any case, one level at a time. For the time being, focus on 31, 31.50, and we take it from there. Okay. Yeah, Gorkim, that's what I'm assuming, that it's exactly like the Bulgarian currency that's pegged to the euro. That's what it seems it's happening with the Lebanese. I've never traded or whatever. I know Lebanese people, and to be honest, now it makes sense that none of them has ever asked me for FX because they seem to be pegged with the dollar. So, yeah. Okay, I think that's it for today. Have a wonderful rest of the day, and as always, we'll be back tomorrow. Bye bye.